We've got a slightly different show this morning because Jeff is not with us, but Lloyd is with us. Good morning to you, Lloyd. Good morning to Angel and Paul. I see in the room. Let's bring my charts up. So the pound trade won't be going on today, even though we will have a quick look at it actually. Let's see if I can.
Hi Ash, good morning outside.
Good morning, mate. How are you?
I've actually just been back from a staycation with my family. So literally just now as you text me, I just stepped into my house.
Oh no, mate. Had you forgotten? Had you? Had you forgotten?
No, I was rushing for time.
Oh, mate. Oh, sorry. Do you know what? I don't really know why we arranged to do this show because it's bank holiday in the UK, and I always forget. In actual fact, Angel, if you remember, it's a bank holiday also at the end of May. So it's probably better we don't do that show because it's so the 31st of May is a bank holiday. So we may as well have that off as well. So if that's all right to cancel that one, that'd be great. Good morning, Paul. So let's have a look at the pound now. To my knowledge, the way that Jeff trades this is that he looks at the range of the day. So let's have a look. Good morning, John. Where are we at? No, I can't find what I need here. This one here is what I need. Now he looks at this range. I think you guys can correct me if I'm wrong. You probably trade it every day when you're in with Jeff in the morning, and he'll be looking for this to be a breakout. Now at this stage, this looks like a break to the upside. We got 3 minutes left, but this is a pretty strong engulfing bar. But looks like a range is in play here. So to the top end, to the bottom end. Now you'd probably want to come out of the daily pivot and see whether that did actually grab any profit. There is an issue here with the monthly. However, if it does break through this high at 1.3836, then the monthly pivot will then have been taken out briefly. So there would be some potential upside, and as I say, daily pivot looks like a decent area. The weekly pivot also looks pretty good, but if we look here on the daily pivot, the daily pivot does run in pretty nicely to this low here. So I don't think you'd be aiming for too much more than that. I'd want to see this bar at the top end of its range as well. I wouldn't want to see it tucked down too much, just to make it look a lot stronger. So let's see what we have here on the fib as well. The fib is probably here. And that's interesting. It puts it a bit higher. And that would put it really high. Oh, I wonder if the fib's here. Yeah, that looks even better actually. That looks like that's probably the fib there, just because there was an end to the run to the downside at this particular point here. So I would use the fib in this example on the overall movement. So from the highest point to the lowest point of the trend to the downside, which means that there is a really nice 50% retracement between the daily and the weekly pivot. So that's the target there, and I would suggest not wanting to take on any more than that. Now let me just have a look at what the risk reward is. 36 down, 20 to the upside. The bar is looking a lot less attractive currently as it tucks itself down back into the body. And I don't think you'd want to play this as any more than a couple of hours, So if for it to be a proper breakout, then it's got to kind of pick up some steam here. But that looks like the right brilliant stuff, John. Alrighty. Alrighty, so you're going to take that to the upside. It looks pretty good, doesn't it? I mean, the fact that this is a bear flag is I don't think is an issue. And if we scroll out a little bit and just have a look at the range, now that's all marked off, so that's all fine. So that to me, John, that definitely looks like the target. Daily pivot. Now you could try and get another 5 or 6 pips out of it, and that's just down to whether your appetite for a little bit more upside is there or not. But that looks pretty good, doesn't it? If it breaks to the upside there, then the daily pivot is looking or appearing to be the lowest point of contact. So that would look pretty good. So you got around about 20 pips 20 pips up and around about 35 down. So it's near a 1 to 2. Ah, you'll take on the 30. Okay, let's have a look. Yeah, that looks better on the 30 because then you've got this, which means that the break of this high might actually be of interest. Now I might end up taking this one with you. Let me just have a look. It might be quite quiet today just because of the bank holiday. In fact, it will be quiet today because of the bank holiday. We've got some really interesting looking movements in some of the cryptocurrencies, but potentially on pretty light volume.
Isn't the bank holiday always a double-edged sword? I mean, ought to be quiet, but if someone makes a move in the markets, it can be other people, then usually it results in a spike.
Exactly, mate. Yeah, exactly. Which makes it a lot trickier, doesn't it? Because yeah, you know, there's just a lack of liquidity, which could be sort of quite useful. I'm just bringing up a pound on my other chart. There it is. Yeah, it could be quite useful to have that lack of liquidity, but by the same token, it could turn around at any moment because of it, I suppose. Yeah, it doesn't look great. The pound isn't looking great yet, but let's see what happens. I might well trade it with you, John. I'm gonna keep my eye on it on this other chart as well and see if that looks like it's tradable. Okay, so that's the pound trade, and we'll have a look at some of the liquidity traps. And because of that, Lloyd, does that mean you would tend to avoid a bank holiday Monday as a trading opportunity?
I don't actually personally for me nowadays. I don't particularly avoid or embrace news. Yeah, I'm more of if there's a setup, I'll go for it.
Yeah.
But due to my own trading experience, I tend to avoid Mondays.
Oh, okay. So Mondays,
yeah,
Mondays a bit out anyway. Okay.
Yeah, I mean, I have this conception that during Mondays, market usually are slow. Probably because the London and the US have not really started yet, so that's why it's a bit slow.
Yeah. I get it. We've got really you're going to be sort of giving us a little bit of an overview of indicators, mate. So let's have a look at the week and see what we are seeing on the broader kind of macro picture, and then we'll have a look at some of the setups as well. So we'll talk about some of the fundamental drivers this week. I want to talk a bit about COT data. I want to talk about seasonality, and then we'll hop into some of the indicators and see what the charts are sort of telling us about what could be shaping up this week. So we don't want that there. I'm going to bring this in here. So I'm going to bring up the COT and seasonality as well. But let's look at the fundamentals first. I'm just signing into the COT website. There we go. So we've got it. Right. Now. There we are. Right. So let's see. Right. So far today, M1 inflation gauge coming in pretty much the same line there, and it looks like a pretty benign number. Doesn't look like that's significant in any way, shape, or form. The ANZ job advertisements month over month. Now, this does this is where it will start to get into interesting. Now, this could be seasonally adjusted, so we're not really sure at this stage whether that's a good number or bad number. I'm kind of more interested in year on year rather than what happened in the previous period. So let's bring that up and have a look. So May 2020, we are looking at 4.7. Let's have a look at, sorry, May 2021, 4.7. Let's have a look at May, a big drop in May 2020, which would be normal, I suppose, with the pandemic. Let's have a look at May 2019 is -1. And it looks, when you kind of look along here, actually the number looks okay, doesn't it? You know, there's the line. So the number looks okay with seasonally adjusted. Massive spikes here anyway because of where we came from. That this huge spike down here is kind of now being distributed really for you know, throughout the rest of the months. So it doesn't look too bad in many respects. So I'd say that's at the higher end of the ANZ job advertisements when you consider this this number here at 6.2%. Okay, that's also pretty high. 5.1%, 4.3%. So the spikes are between 4 and 6%, and we're within that range. So I don't think that's particularly telling in many respects. German retail sales month on month coming in at 7.7%. So that does look pretty good. That looks particularly good. So that would suggest already that the euro for some downside is probably off. Oh, thanks, Angel. Yeah, if you could post in what's going on in YouTube, that'd be great. From Craig, I'm on an early sell. Is that on what, Craig? Is that on the pound? You're on an early sell with a pound. Commodity prices in Australia creeping up, so bit of inflation kicking in, actually, mate. And I tell you what else, I think overnight Yellen, we'll have to have a look at what the statement was, but Yellen was talking about inflation creeping into the US market. And I had a look at some inflation data yesterday, and I can tell you across the board, we are definitely seeing a pickup in inflation now manifest in the numbers. So I'm not sure where this deflationary argument is now going to play out at this stage. Commodity prices year on year spiking again to the upside, and it looks like it's at the higher end. Little bit of a anomaly here, actually. Maybe not. Maybe the anomalies do happen once every few years. But we've got rising commodity prices from the from Australia, so that's inflationary and actually pretty good for Australia in many respects if we're thinking about how they would control it with their currency. Later on, we do have some PMIs and services and manufacturing PMIs throughout Europe. ISM manufacturing PMI, always a really interesting number, and the ISM manufacturing prices. So I'll be watching out for that. FOMC, William speaking, but also Jerome Powell is speaking later on. So interesting to see what these numbers actually start to dictate today. RBA statement as well tomorrow. And I wonder whether we don't see too much movement with the Aussie until that statement is done, and then we potentially see a move to the downside. And I will show you why I think that there might be a move to the downside in a moment. But that looks like in hiatus. And then we get some numbers from the Kiwi. Now I want to have a look at the Kiwi later, if that's okay, Lloyd, just for some indicators, because I looked at the Kiwis fundamentals yesterday, and they looked pretty bad in comparison to many of the others.
Kiwi?
AUX. Okay. You're gold. You're short on gold. Okay. All right. We'll have a look at that in a second. Yeah, the Kiwi. The numbers from New Zealand didn't look very good to me. And there's a few other things that I think we need to look at with that as well, and I'll show you those in a moment. But let's just finish going through the fundamentals for the week. RBNZ Governor Orr is speaking on Wednesday, a couple of times by the looks of things. EU economic forecast could be interesting. The ISM services is going to be interesting. And the first week, I think, is always a brilliant week. I really like it for information. It really kind of can shape the month. So we've got to pay attention this week. And we might not be taking any longer term positions until a lot of this stuff has passed. The asset purchase facility from the United Kingdom as well. I don't think they're going to be changing anytime soon, but we may well be waiting for that before we take any trades. I think it's Friday that it really starts to get more interesting, though, because this is the day that we start to see the unemployment numbers from the States. And this is the real gauge that we need to be following. What's happening with the jobs market? Jerome Powell has clearly stated he's not going to be doing anything until he sees that job market pick up. So we need to watch out for the job market. So that's the fundamental aspect. Now, when it comes down to the COT report, and I'm going to brush on this really quickly, and the seasonality. Oh, yeah, sure, Andy, no problem. We will have a look at the DAX, no worries at all. I mean, to be honest, the retail numbers from Germany today would suggest that that the DAX could be a pretty good play. This is starting to look pretty good, isn't it? I am quite tempted to take a trade in the pound. I just want to see this break out, though. Just going to make sure that I've got this on another chart so I don't miss it while I'm chatting. Okay. I want to see it start to rise above this level here, and I will take the trade with the pound. Okay, so what we got? Yeah, just a quick look at the COT and the seasonals. So firstly, the Aussie, because that's going to be in play this week. The index is low, but it's been embedded down here for quite a while now, quite a few weeks down. It's been at this lower end. Don't see a massive pickup in the selling, really. It's just stuck down here, but it is a bit more elevated than it has been for a few months here. You see how quiet it was down here. So it's a little bit more elevated. So there's some bearish suggestion here with the Aussie. And when we bring in the seasonals with the Aussie as well, this is the seasonal pattern with the Aussie. In May, it tends to be very, very weak right up until around about the final week in May. So I think we need to watch that for price action to the downside. So the Aussie probably after that RBA statement is the better time to try and trade it. It's probably not worth getting in too early. I have got an Aussie yen short, but it still might be a little bit early. The pound, we got also some decision making from the UK central bank as well, and you can see as well embedded really near the zero line, and doesn't happen all the time. You know, this is 3 years ago, the last time we saw it down here, and there is a pickup in the selling pressure here. So the pound is looking a little bit clearer for some downside. So the pound does look weak. That doesn't mean that the pound trade today isn't on, because we have got a potentially quiet and relatively illiquid market. So a pop to the upside should carry through. And finally, the Kiwi I want to look at as well, because the Kiwi, as I said, has got some pretty weak fundamentals. Not quite down at zero, but it's low. You know, when we look back here, this is 2018, this is 2017. So we're edging lower here, and just a little bit of a parting of the waves here. Selling pressure picking up, buying pressure starting to subside somewhat. So the COT data would suggest that that the Antipodean currencies may well be the ones to watch for some bearish price action this week. And again, when we bring in the seasonals, look at that. May, bang into the downside, right up until around about the middle of May. So after the RBA statement, I'm going to be watching out for the Kiwi as well for some potential downside. Shall we have a look at indicators first, mate, on those, or should we have a look at the DAX first for Andy, sorry?
Actually, I can share with you what I do agree with what you said, that the pound, Aussie, and Kiwi. Incidentally, these three I'm also looking to short, and I'll show you the reason why.
Yeah, let's have a look.
For the currency indices, I think I've done my analysis over the weekend, so I'm bearish on those. Okay, I'll share with you this. So at this time, I'm gonna I will show you as in price actions, but I'm actually using them as how to put it objectively as possible. Yeah. So what I'm doing is I'm just using price action to actually show me the way on the higher time frame, which is on the weekly time frame. And to me, it's a quite a simple way of using it. trading with the wicks, as long as it's a long wick, so in this case will be a test bar, I tend to trade in the direction of the rejection. Yeah. So for pound dollar, to me, this is very clear cut that actually price wants to go down. So I really need an excuse to go down. And this is actually where Ash, the discussion we had 2 weeks ago, volume might pave a way for us. Yeah. So this is in combination with one of the ways that I traded. So really, colorful candles. These are actually volume-based candles. Yeah. So what I'm waiting for is really waiting for price to actually tell me that, look, I really want to go down, and the volume is proving that it wants to go down. So on the weekly time frame, price is having rejection, nice and well, but really we can read this as range. So I'm waiting for price to actually break the closing price on the lower time frame, which is H4 in this time. Then with the confirmation of volume, I'll actually jump in for a short. This way of trading has actually gotten me pretty good results, I would say.
Oh, brilliant, mate. And how long have you been doing this?
The weekly to H4 actually I've been trading it for more than a year already.
Okay. And what about with a volume indicator with it?
Just added in like 2 weeks back since our discussion.
Okay. And it's pretty good, is it?
And it's still actually for the past 2 weeks. Not that I have that many setups, but so far it's at least visually it looks okay to me. For testing from 2 weeks ago till now, it still looks okay to me.
Brilliant.
Yeah.
Brilliant.
So just to add on, pound dollar, really you can see price in the past rejections. I'm just waiting for an excuse to get short and have gain some pips along with it. Yeah.
So to talk us through what this is all showing us then. So the green and red bars are showing us up and down.
The green and red bar is really just volume. So buying volume and shorting volume, and the gray bar in between. The green bar in between is really just inconsequential volumes. I mean, equal buyers and sellers.
Interesting. And is this what is the name of the volume indicator? Yeah, does it indicate the trade volume of the whole market for the pair, or just the broker's volume for the pair?
Just the broker's volume. Actually, I can't really get the whole market. Yeah. So the broker's volume is just indicated on that. But if you think about it, the broker's volume is gathered from a few major sources.
Yeah.
So Dukas copy and all that from major bank. So even though we are just accounting for just the broker's volume, according to research, as long as the broker get their ticks from the orders from major sources, it correlated about 60% of the time.
Yeah.
Yeah. So I think that's actually good enough in a way.
Yeah, I like it, mate. So the what are the blue boxes and the red boxes showing us there?
This is just a higher time frame candles.
Okay.
Yeah. Why not I just give you an example? A few weeks back, this was the trade that I got. Oh yeah. So this was the trade I gotten. So simply you can see on the weekly time frame a rejection bar last week. There it is. So when I go down to H4, I'm just waiting for price to actually break. You can see as long as it breaks the closing and the selling volume is present, I'll just jump in for fun. And yeah, at least this concept proved me quite well.
I see. So the red box is showing us that the price action on the higher time frame is to the downside.
Yeah.
And then we see some selling volume coming into play. And this indicator. So can I know the methods to do this? Well, let's just quickly get to what Jara said. So Jara's asking, what is the name of this indicator, and is this on MT4? Is this something that you've created?
I don't create any indicators. I'm not a programmer. So essentially, I'm just a crawler. I'm a stalker for forums, looking at interesting indicators. Sometimes I'll buy them, and sometimes people just share for free and I'll take and use them.
Okay, yeah. So this is something that you found. This isn't on MT4 standard. You have to go and hunt it and download it. And what's the name of the indicator?
This is a secret. It's not actually. Great filter candles. Can you see that? See.
Yeah. It's called braid. Yeah, braid filter candles. Okay, thank you, mate. And from Navin as well. So can I know the method to do this? That seems to me, Navin, that it might take Lloyd a while to really go through his whole process. I don't think it's going to be a case of just slotting the indicator on one time frame and reading it, unless I'm wrong, Lloyd.
No, let's not go to that, because there will really be a strategy sharing session. I mean, it's for different purposes.
Yeah.
But actually, just to
Yeah.
correlate with what Ash has mentioned, I mean, just look at Aussie Swiss, Aussie. I'm short, so you can see that previously this candle, there was a couple of weeks back, huge rejection, and price has been. All these bunch are, to me, are just essentially inside bars, so they need to be going somewhere. So this week may prove to be the point whereby the Aussie is finally weakening. Yeah. So again, it's up to you how to deem an objective way to get it. Yeah. As long as actually price breaks the low, I'm happy to actually get in. Yeah. So that's the objective part for me. Aussie dollar also showing a similar tendency. You can see huge rejections, then followed by the last 2 weeks, long weeks, long weeks. So the way I read it is that the weeks are telling me that price wants to go somewhere. Yeah, but to confirm it, it has to break a level. So I define the level as a closing price. Then just wait for price to actually breaks it. I mean, that
Yeah,
would
it's
be the
pretty
same.
good, isn't it? The Aussie dollar showing a head and shoulders pattern there as well. So it would suggest that that there's a distribution pattern going on. So I would have thought that's the same thing. There won't be a braid indicator in your MC4 Jara because Lloyd has got that from a forum. I haven't got it in mine either. So maybe just Google it and see whether it comes up in a forum somewhere that you can download. Yeah, so with the with the Aussie, what I've also noticed is that it's been on the move against some of the other currencies, but just not against the yen and not against the dollar. And I wonder, the way I'm looking at it is to try and effectively ascertain whether there is a delay against the yen and the dollar, and actually we do still see some Aussie downside, or whether it's just not going to manifest itself in those two markets.
Well, I think any pair that's against the it's just a personal opinion, that's against the what you call it, safe haven currency, it's particularly hard to read them.
Any pair that's against what? Sorry, buddy.
The safe haven currency, which is usually the yen and Swiss.
Yes.
Particularly hard. Yeah. My preferred method would actually just be to go to the majors, in this case the Aussie dollar, and derive some meaning out of the movement. Just not as you have rightfully put it. I mean, I look at a weekly bar to ascertain my direction, but you have, at the same time you already saw your head and shoulder. So that actually did tell a lot of story. Yeah. How do we get into that particular story? I would say it's up to individual traders really.
Yeah. Yeah. Okay. So, any of the others that you're looking at, and what about the Kiwi? Because the Kiwi, as I say, I think is probably one of the weaker ones when it comes down to the fundamentals, and we're also seeing potentially some kind of seasonal weakness coming into play with the Kiwi.
So, before I jump to the Kiwi, the pound, I would say that the pound also is displaying similar tendency. You can see that this is what pound Swiss. Yeah, to me it's very clear cut that it wants to go down.
Yeah.
And that a pound Kiwi is a bit hard to read. Yeah. If you look at pound Swiss and pound dollar, it does tell the story that you want to get down, right? So now this is the part whereby Ash, you need to shed some light for me. So if the pound Swiss and pound dollar shows me that it wants to go down, but for the pound Kiwi, it actually shows me it wants to go up. What story does it say?
It says to me that the Kiwi is weak.
It's really, it's either really weak, or it is really foretelling a story that is going to get weaker over time.
Yeah.
So if I look at Kiwi Swiss, get all those horrible weeks that's been showing up. So it does tells me a story that, look, I really want to get down. Same for, let's say, the majors, the Kiwi dollar. Look at these two ugly spikes here.
Yeah.
So it does want to really go down. And so again, up to each individual traders, how would they get in their specific timing to get in? I would say up to them. For me, usually I'll just go down to H4. Oops, wow, sorry. we can see this is the level that I'm waiting for. So
Yeah.
The volume is still selling volume. So until price breaks this, I still need to trade a level. Yeah. So the closing level of the weekly price breaks, either a retest or consolidation of stocks. Selling volume comes back in. I'm happy to get it.
Yeah. So, so the way that this is the thing with this is that the COT data is weekly, week on week data, and the seasonals obviously are pretty much any time frame you want. But we were looking at a whole year's worth of movement for the seasonal patterns. Now, the fundamentals take a little while to turn, but they're not particularly good. So I guess what we're both saying is that there's plenty of time to get into this if it starts to look like there is a setup. But right now we're not too sure whether there is a setup. I haven't looked at a Kiwi dollar. You're looking at the Kiwi dollar there, right?
Yep, this is Kiwi dollar.
Kiwi dollar. I haven't looked at a Kiwi dollar chart, but I'm going to bring one up now and see if I'm. And I suppose the other interesting thing about this is, should we be playing it against the dollar? You know, what's the stronger currency out there? And we'd have to have a look at the dollar. Yeah, Kiwi dollar around about that daily pivot to me. I don't know. You're not looking at areas, but the Kiwi dollar around about the daily pivot looks quite interesting.
Kiwi dollar. Let me have a look.
Probably the weekly, actually. The weekly looks the most interesting. Yeah, that point there, that weekly area on the Kiwi dollar, that would be a decent area for a short, in my opinion. And it would probably run quite nicely into a decent time frame as well. So I'm going to look at that now. I want to get my Aussie yen trade moving a bit better to the downside before I was to take anything on in that area. But if the Aussie yen is starting to move to the downside, then I'd be quite keen to get the Kiwi short around about the 0.72 level.
Hey, are you sharing your screen?
No, I was looking at your screen, mate. But I can share my screen if I wasn't going to pinch it away from you just yet. Have you pretty much finished?
Yeah.
Okay. All right. Let's have a look at this then. This is what I'm looking at with the Kiwi. And then I'm going to get to the DAX. Okay, so this is what I've got with a Kiwi. I've got this, as Lloyd has pointed out. So in fact, we can start first. Let's just have a look at a clean chart first, just to see what the pattern's suggesting. Now, I don't know whether this is equal or not, but let's have a look at if it is. I think there's a channel here. Yeah, that looks pretty good. That looks pretty good. It's got a couple of touches up here, which I think would qualify it. So we've got this channel going on here, which suggests that if we're going to do a measurement of the channel, that would lead us to be looking for this. Now it's broken down to get back down to this area here, which is just above this support level. Now let's see if that runs in. Looks like the lower end of here, so there may well be just a grab to around about that point there. So there looks like a target of around about 0.7101, I would have thought. Now you could say, if you're going to be a little bit more aggressive, that you can aim for this to be touched. So it's somewhere in this band here would be a take profit area, in my opinion. Now, the reason I like the weekly pivot, and I'll bring it up here on with some detail now. Let's look at the 4 hour again. The reason I like the weekly pivot is that there is this trend line. So we're looking at the lower end of the channel, and this would suggest if that weekly pivot is going to be the area. The reason I like it is a few-fold. Firstly, it may well run along this trend line. If it's going to be up here by, what's the date today? It's the 5th today, so it could be anywhere. Third today, sorry. It could be anywhere by the end of today or into tomorrow. So if price action manages to hug this trend line by the end of today or into tomorrow, then it's going to be on that weekly pivot. So that's the first thing that I quite like about the weekly pivot as a potential entry point. It's also more of a round number, 0.02 rather than 0.01905 or whatever. Which if we look at the daily pivot, then the daily pivot's at 0.018. So I like the round number. So we're looking at 0.02, that's 0.72, sorry, as a potential price point. We've also got the weekly pivot here, and also we've got a decent fib. Now, we'll have to have a look at this. I think the fib is probably off this level here. And look what that gives us. That gives us a 50% retracement into that area. Now, if I was to take the fib up, then you get the 38% retracement. So it's either this range here, and it almost now doesn't matter which one it's coming back to, which one we read as the fib. If we say it's this high to this low, it's still going to be a 38% retracement around the weekly pivot. If we take it from the trend high to the low, then it leads us to a 50% retracement around the weekly pivot. So that looks like a sweet spot to me. I don't know what you think about that, Lloyd, but that's where I'll be looking for indications of a reversal around about there.
Can I sell you a warning?
Yes, please do, mate.
Let me grab the screenshot. I bet this concept has not occurred to you before, but let me sell you a warning. So this is my what do you call it? The weekly resistance one, and this is my weekly support one.
Yep.
Yeah, so I just color it and enable previous level. So if you actually take notice, the resistance one and the support one moves up, step up, one steps down. Now this does not actually occurs frequently. The more frequent is actually it steps up in tandem with the weekly pivot.
Mm-hmm.
Yeah. So what it means is that I've actually done backtest on this. So what it means is that if the pivot and support, the resistance and support is not in tandem with weekly pivot, that means we call this widening.
Yeah.
I will let you draw your conclusions. Let me see from the past if we have it. There we have it. Okay, no, this isn't it. Yeah. So yeah, so this is one example you can see from here.
Yeah.
Widening. What happens during the week at the price? So example one. Let me give you another one. Yep. This is widening. You can see it slightly steps down. This one slightly steps up.
Mm-hmm.
Again, what happens during the week? And then
I see. So what you're saying is that price action could be pretty choppy in there.
Precisely, you got it.
Yeah.
So that's the warning I'm telling you.
Yeah.
So if you have this, you can actually go back. It doesn't occur often, but you find that when the widening actually occurs, it gets really choppy throughout the week.
Yeah.
So I'm not entirely sure that okay, put it this way, if you're gonna place a trade, then having a fast TP will help.
Yeah. That's good, mate, actually. So really what we should be what that says to me is wait for the data to be released, because otherwise you could get chopped up and down. Or, as you say, maybe a fast TP1, but maybe actually more importantly, wider stops. So because if you're trying to negate and navigate through choppy price action, the best way to do it is say, look, that's my direction, so I might need a wider stop on this just so I don't get taken out on a fluctuation in price. Yeah, okay, mate, that's really cool. Actually, I will look at that. I think I might look at having a broad stop on that one to negate that, which means that when we look at this, but thanks, buddy, that is really useful. So what that means is just putting a stop up here may not be very wise. I'll tell you what, not to get you to focus on it too much, mate, but when you see that WR1, WS1 diverging like that, within that chop, I wonder whether putting your stop above the WR1 would be is there enough evidence to say that that might actually be the place to put it above?
According to
I mean,
past instances, yes.
yeah, so actually, what that might suggest is that just above this, just above where the fib is, just above where the previous trend started, might be the best thing to do. You know, so it could chop around in here, but we shouldn't get run over. So a few pips above this point, so somewhere around about the 72.60, which does mean that we're going to need 60 pips to the downside before we're making any kind of profit. And I'd want to make sure that would be okay, because there's the monthly pivot there. So for 1-to-1, we're probably looking to enter at 72.72, stop at 7.7260, and you know, as you suggest, taking something off the table at maybe the first point of contact. And this looks to me like the first point of contact, or certainly the first real significant one at point 7130. So we could be looking at around about 60 or 70 pips to the downside. So that might be the best way to play that. Now, I quite like that because we've got an entry, we've got a stop loss, and we've got an exit. And it looks like, you know, as we've been talking about animal trades most recently, that looks like a falcon, looks like a 1-to-1 kind of scenario and situation. So you might not want to trade this if you're either a hunting dog or a jaguar style trader. So if you're a 1-to-1 type of trader, then you would certainly want your setup to be something that you feel confident that it tends to work out more than 50% of the time, and then you've got 50-50 when it comes down to levels. Now let's have a quick look at the DAX as well, because we've been asked about the DAX. The DAX. Let's make sure my chat is up. Okay, just make sure that hasn't got. There it is. This is non-farm payrolls weeks are probably choppy. Yeah, you're probably right, actually, Jara. Yeah, probably going to be choppy on the dollar pairs. Very, very good point. So we might even be waiting until Friday before it starts to get clearer. I'll probably try and take that on though. As I say, as long as the price is up to the weekly pivot a minimum, and the Aussie yen has started to move significantly enough in my favor, then I'll probably try and take that one on, regardless of non-farm payrolls, and just try and manage it on the risk of how to manage the money. Right, the DAX. What's been happening with the DAX? Here we go. Now, I find the DAX a bit of an interesting one at the minute, because I don't know how that chip shortage has affected the auto sector in Germany. Well, I mean, I do know it's affected it a little bit negatively, but I don't know how much of a hangover we're going to get from that. So let's have a look at the price action. And I do see, you don't like that?
What I can share with you with the chip shortage, right? It shouldn't affect that very much.
Okay, so might be a storm in a teacup for a while.
What happens is that you're talking about the computer chips, graphic cards, and those sort of things, right?
Yeah.
Yeah. So the automakers chips are actually belonging to the low end sector. It's not a high end sector. So what's being negatively affected is the high end sector chips. Those are in demand. The low end sector, there are easily more than 100 companies making, so they should still be catching up. Yeah, wouldn't be in for the long term.
Okay, so the cars in the upper band of expense are the ones that are likely to get affected.
Cars are not likely to be affected unless you're talking about EVs.
Okay.
Yeah. The combustion engine should still be quite okay.
Okay, all right. In that, well, yeah, I suppose the EVs are starting to come into place. But okay, so maybe that's a bit of a non-event, and we won't focus on that too much. Let's have a look at the price action. The retail sales. I like Germany as an economy. It's very robust. It's very well run. and with a weak euro that we've seen most recently, then it should continue to do well. The big sort of issue really right across the globe, and actually let's just touch on some other bits and pieces and see what's been going on. These are bullish signs and signals. We got Bitcoin continuing to move to the upside. It's a bit of a tricky pattern here with Bitcoin, but it is continuing to move. Ethereum, astonishing really what's happened with Ethereum. It's just bashing all the other cryptocurrencies or many of the other ones out of the water right now. So that's also cruising to the upside. Bullish, insinuating more kind of confidence and bullishness in the markets. Now it could just be Bank Holiday Monday, and I suspect this is Bank Holiday Monday price action. A lack of liquidity is enabling the likes of Bitcoin and Ethereum to push up fairly unabated right now. So I wouldn't get too excited over it. So that would suggest that there could be what I don't like this stuff. I don't like things that just go in one direction for an extended period without any kind of retracement, because there are still weak hands holding this. And there are still weak hands, maybe less so with Bitcoin, because Bitcoin did have a little bit of a flush out. But I would suspect there's probably a few weak hands that have probably possibly even got back on board. So I still think there could be more of a flush down with Bitcoin, a slightly more questionable. But Ethereum, you would suspect it probably would happen. And then we get on to the indices. And we look at the NASDAQ. That again has been on a big run to the upside, probably had a significant enough flush out there. But we've had earnings season we are in earnings season from America, and some of those earnings have been just amazing. They really have bashed the ball out of the park, and yet the NASDAQ has been weak. And it's difficult to know what message this is sending, but it may be sending the message that all those earnings numbers have been priced in, which means that we are now focusing on what can happen next. And when earnings, and it's the same as price action charts, when earnings start to over exceed what people believe could have been the case, eventually the expectations are going to exceed what the actual print is going to come back with. And we might be in that period. We might be in the next 3 months, which does tend to be sort of a little bit weaker for the stock market anyway. But we might be in 3 months now, sort of coming up, where the next earnings release is just not able to keep pace. We've had a huge recovery. We've had basically an economy starting out again. And if you think about if you think about what happened with cryptocurrencies, when something launches and it launches for argument's sake, it launches for $1. To get to $2 isn't too difficult. To get to $4 from $2, it becomes a little bit trickier. And then when you start extending it to get to 4 to 8, that becomes even harder. 8 to 16, to double in price effectively, it becomes harder and harder. And I think it might be the same with the economy, where the numbers have been particularly good because of the low base point it was starting from, as it rebuilt itself back up again. Now we're sort of on the move again now. So will those numbers continue to just hit all expectations out of the way, or will there be some kind of subsidence of the releases? And I think there probably will. And I wonder whether that's what's happening with the NASDAQ. I don't know. It's difficult to know, isn't it? Who knows? The only thing we can do is control the way that we interact with the market with managing risk. And that should be the forefront of our mind. How do we manage the risk? But if, Andy, I suppose this is really for you. If you have a long-term view on the DAX, and I'm bringing up the S&P and the Nasdaq because they are important gauges for any index that you're going to trade. But there has been a huge move to the upside, which has been relatively unchallenged. and we've got extremely good earnings numbers, and we probably will continue to crack to the upside. But at some point, it's gonna fall. I would have thought quite significantly. Now, if you have got a long-term view on the DAX, the chances that the DAX gets back to at least this level with a move to the downside are pretty good. I suppose the question that you really need to pose is, am I comfortable buying the DAX here? Or would I prefer, of course you'd prefer to wait. How can I phrase this? Would I be prepared to miss a move to the upside if the DAX doesn't come back? Because the truth is, when it comes down to the price action, when it comes down to the value of this stuff, it is overvalued. It's a bit toppy up here. But you might miss a move because it doesn't suggest just because it's toppy it's coming down. The confidence in the market, as I hope I've illustrated with the likes of Bitcoin's recent recovery after a couple of days of downside, Ethereum's move to the upside that we've seen this morning so far. The S&P continues to kind of drag itself up. The Nasdaq continues to drag itself higher. So with that suggests that there could be a continuing crawl to the upside, even with insufficiently good data. So if you are prepared to miss the move to the upside, my personal thought is this is too expensive. I wouldn't want to trade this. I want this to come down a bit. We've really been looking at the DAX having have broken the record highs that it refused here. It came up and refused here. Is gone through, and I don't think there's been a sufficient test of this particular level, 13,550, let's call it. I mean, these are the futures, so it's somewhere around there. I don't think there's been a sufficient test of this level. The level is probably here, actually, because I prefer to use the closing values here and the closing values here, which suggests that, okay, yeah, we've had a month of a test, so maybe that's enough. I'm not sure. Is a month's worth of downside enough? Yes, it caused a bit of unwinding, but since then we've just kind of started to motor again. So I'd like to see the DAX a bit lower before I got involved. But I'm prepared to miss out, and that's the way that I'm kind of looking at it. I'll be prepared to miss out on it. And if you're not, then maybe you stick with a trade. Sorry, mate, go on.
Can I sell you a different story?
Yes, please do.
Wait. That's my job, right? To sell a different story.
Exactly, because the thing is about all this stuff is that if you don't consider the other side of the argument, then you're going to think that you've got the most important the most important cards in your hands, and that may not be the case. So yes, please, mate, we do need to hear a different side of the argument.
So I'm just still sticking to my indicators and still sticking to an evidence-based approach. So if you look at pivot steps down, and then price is above pivot for now. All right, so this is the current situation. So if you look at what happens in the past, so let's look for pivot that steps down. All right, so steps down. So you can see that pivot steps down twice, price remains above the pivot. And look what happened next. So the key thing is where if pivot steps down twice, we can interpret that price is giving us a discount. The next thing to look at is where price ends up, which side of the pivot. Right. The evidence-wise is that now price is above the pivot, so the discount is over. So it's resuming. So let's look at 2 steps down from the past, from here, steps down, and price is definitely below the pivots. And where it goes, right? So let's look for the third one.
Oh, that's really interesting, mate. So what we're saying here is that this is a weekly pivot.
So let's say this pivot steps down. Price is above the pivot.
Yeah.
Seems like the discount phase is over, and then price rallied.
Yeah.
So we can go through this many more times, but I believe that this is the story that I wanted. The story I wanted to sell, I think, is clear. That if the pivot already steps down 2 weeks, but price is on the second week, price is firmly above the weekly pivot.
Yeah.
Probably the discount phase is over. If anybody, to me, what I interpret from the charts or from the indicators is that this seems like a good time to get in. Would it rally hard? Then that's another story.
Yeah. So what we probably want to see though is at least half the week that it's above that weekly pivot, right? Because it could, I mean, even this 4 hour bar might end up below it.
Yes, you're right.
Yeah. So we need to see at least half the week, if not all of the week, before we maybe trade this on the following week. We might be looking at trading this actually on the 10th of May rather than any time this week. Possibly, I don't know, but I think that's really cool. So the weekly pivot stepping down suggests that the price has been discounted, but the price action above it is saying that maybe it's been discounted sufficiently. And actually, if you were to take that particular stance of trading it on week 3, or if we call this week 1 actually week 2, in this situation you would have been probably getting the better entry. Nice and clean. It's a nice breakout of a little downward trending line on the 4 hour price action. Break and retest of that. It's also a step up, interestingly, of the weekly pivot that week, and then you have a trade to the upside. So maybe that's a sufficient signal.
I would say it depends on one's character. I mean, if anybody wants to get in cheap, then for this week, I would say just wait for the first higher low, and we are good to go.
Yeah,
Or
but
if you are more
it's
conservative, then the following week with the pivots, then you can get it either with a pivot break or again any retracement of sorts.
yeah. Is the in this example though, the first higher low actually is the start of the next week.
Well, I would say from here, the first high low goes towards
Oh,
the
okay.
end of the week. I
Okay.
would say.
Okay. First high low from that bottom down there. Gotcha. Okay. Yeah.
Yeah. So.
Yeah. Interesting, mate. Yeah, that's really cool. That's really cool. Okay. Does that help, Andy? With the DAX. So what what did you say? Very niche trading. Got a long on the DAX. Okay. Now I don't know. You see, when people posting that they've got a direction on something, there's it's difficult to know what to do with your particular trade because I don't know where you entered and I don't know where your stop is. I don't know what your risk is and I don't know where your targets are. So when you're thinking about it now, if you're new to trading, just a couple of things that I would suggest that you start focusing on from the get-go. Because it will really help you. And this isn't in no particular order, but focus on where are you closing your position, because everybody focuses on the entries and gets really good at finding a really good entry, but then they don't know where the position's closing. Now, if you know where you're going with your trade, it's a lot easier to then start to calculate what your risk to reward is, obviously. And without knowing what your risk to reward is, then you will never know whether your system is a good system. All you know is that you've got good indicators to get you into a market, and it's much more important to focus on exits than it is on entries. So know where you're coming out, know what your potential plan is going to be. Now that can be soft. All my targets, whether they're stop losses or targets, are all soft targets. That's the area that I'd like to get to. But the market changes and I will change with it. But you certainly want an area that you're stretching for. Okay, it doesn't mean you close it all there. You may choose to, but you don't have to. But you need to know where you're aiming for. Second thing is obviously log your trades. Get an Excel spreadsheet up and make sure that your trades are logged down so you can figure out whether you've got a sound strategy. And the last thing is to understand thoroughly the risk, and don't trade on a trade by trade basis and think that you've got something nailed, because particularly on a day like today with a lack of liquidity, as Lloyd said earlier on, the market could move sufficiently without us, and you could still end up being right on your direction just because of a lack of money that's in the market today. Now there was another one about one of the gold. I think somebody's talking about. So from gold, I'm on an early sell on gold dollar, and that's from Craig. And I wanted to look at gold, mate, with you. So could we have a quick look at that? Yeah, hold on a second.
Wow, gold dollar. That's really an early sell.
Yes, it is a very early sell. um, I'm not sure right now. Well, it is an early sell. I'm not sure right now whether the gold market is the best one to play. Um, it's difficult. Now, the first thing that I would say about gold is that the inflation numbers are starting to suggest that gold should be in the portfolio for a long. Um, Now, that's not necessarily for you, but it will be for a lot of traders. And if a lot of traders are starting to get interested in gold because of inflation numbers, then shorting it is going to be tricky. Yellen did mention something today, which I haven't looked into sufficiently enough, but Yellen did mention something today about inflation potentially being a problem in the US. That's all good for gold. In saying that, I agree with you on the price action. I'm not convinced price action wise that we are quite finished with the downside with gold. But it's difficult for me to have a negative opinion when I keep reading about inflation and I keep seeing, and I read about Yellen saying what she did. So trading it to the downside, I think, is a really difficult trade. You may not like it as a potential buy, but I think as a potential sell, gold is going to be difficult personally. So I wouldn't be getting involved in that.
Actually, I will
Great, Ash.
agree with
Amazing.
Ash.
Yeah,
Uh,
good to have you on board, buddy.
I will agree with Ash. To me, again, from the indicator side of things, that it's really hard for me to form an opinion with gold right now, especially since what happened last week is what I call a pivot squeeze. So just now I introduced to you the concept of pivot widening. So
Yeah.
pivot steps up. Sorry, the S1 steps down and the R1 steps up. So since we are talking about gold, I'm going to introduce you the concept of pivot squeeze. So
Yeah.
which is the opposite. So it's R1 steps down and S1 steps up, which is what I
Okay.
just highlighted.
Yeah.
So in the past, what according to my studies is that when there's a squeeze that happens, it indicates to me that price is about to break out.
Okay.
And if price didn't break, I'll stay out of that pair. So you can see that last week it did happen that there's a squeeze, price didn't break. So if you look to the past, there's squeeze, price broke. You see, so it has a definitive direction after that.
Yeah. Yeah.
Yeah, so price broke. So you can see there's a squeeze, price broke, and then there's a definitive direction to it.
Yeah.
Yeah, so this one, price broke briefly, and then go back to range. Nothing much happened. Price broke. Well, price didn't break. It only break the following week. So there's really nothing that happens during the week. So this one is a short squeeze, a very slight one. So you can see the price broke, then there's a definitive upward trend. Yeah. So the picture I'm going to paint here is that if there's a squeeze in the week, then I would expect that is really the start of a trend, or there's a directional movement going on. And if price didn't actually break, it remains. Possibly I'll just stay out of it until there's clearer direction. There's a cyclicity movement that comes in, then I'll get in. Yeah. So in this case, I will actually agree with Ash that gold is a bit iffy to me right now. I don't really know where it wants to go. Yeah.
Yeah.
At least that's the picture it paints to me.
Yeah. Looks tricky, doesn't it? Okay, mate. Well, I think we'll wrap it up. It's going to be a quiet market today, guys, and I think you might be okay staying on the more confident side of the market for the day. It doesn't look to me like there's going to be much in the way of positioning right now. Certainly in this first session, when the US comes online later on, then there's likely to be a different message. But for right now, it looks like it could be it looks like it could be a bit of a tricky ask to try and get into position. So be careful, and we'll be back tomorrow anyway. I think it will be Shukri in tomorrow talking about crypto, so we can ask him, what's going on with Ethereum and in comparison to everything else. It seems to be in a bit of a blast off right now, and I'll also ask him what he thinks about this 14th of May as a bit of a blow off top for the stock market and potentially cryptos as well. So thanks as always, guys, for listening in. Thanks so much, Lloyd, for coming in. It's been a brilliant session, mate. I really enjoyed your extra take on stuff and the way that you use these indicators. Thank you, John. Thank you, mate.
Thank you, Ash. Thank you, everyone. It's been fun.
Yeah,
Selling
nice one. Anybody that's in YouTube, you are more than welcome to come into the Zoom as well. And if you want to kind of get on live and talk to us with your mic off, then just give us a holler, and you can share your charts and we can go through them as well. But for right now, I will quote the great man, and I will say,